Hi there, welcome to Wyckoff Technical Analysis session for Internet Computer ICP. So last week we talked about ICP, like basically it was going down, but it's not over yet. This week it recovered to above the red key level of 4.52. However, be really careful while we're waiting for the next distribution cycle, meaning a new climax. We have to look back to the history, what had happened, in order for you to get prepared and not being caught off guard. So let's switch to the chart view and start with the weekly chart, and then we'll get to the daily as well after this. So this is the current situation. Basically, ICP has been around a downtrend. If I switch it to a line chart, you see, let's take off this line, it's basically bouncing within this wedge inside the downward channel. However, if we just look at the candlesticks, basically the price has been bouncing off the ceiling, the bottom, and then the ceiling again, and once again the bottom. Obviously there's a center line over there, but I want to make it simple and not overcomplicated for you. So it's still behaving normal, as in many cases in ICP or in other assets, that the prices just basically bounces between the two edges of a downward or upward channel. So that's not new. We expected that to happen. What's going on here is that previously we talked about a time point by the end of September, meaning last week, and we already see the price broke below the support, and that we covered that in the previous session, and we also mentioned that it has finally come down for a spring. But then this week's recovery that goes above the red key level of $4.52, be careful that it's a fake move. If you get in, that's fine, as long as you have your stop loss set, because what happened back in the last accumulation, not the one in 2024 up here, not that one, but the one here back in 2023, around September or October time, again similar time period. So what happened was, initially the price broke below the red key level, that was June that year, and then it reclimbed all the way till end of July, just to go back to a deeper adjustment, the true spring, during mid-September, and lasted all the way till mid-October. So for that entire month and a half, 6 weeks over here, that was the level. We are currently still at this stage around the red key level, so we are similar to what's happening over here. While we are hoping for it to go to the distribution cycle, be careful that it's going to exhibit some similar behavior and drop back to this red dashed line to get to a spring. So that's why if you get in, don't just expect it's 100% going to go up to this kind of level and eventually to the distribution and all the way to the buying climax. That's one possibility, not the entirety. So while we have the spring here, I would put a question mark to remind ourselves, yes, this is definitely a spring because the level is already below the selling climax set in March. But then, is this the lowest point of the spring? That's the question. So as of this moment, I say let's give it a 50% chance that it may come further down to test this red dashed line at around $2.80 or around $3, depending on how deep it's going to test. And given it's still within this downtrend, let me extend this trend box as well, all the way. So the red dashed line cuts across this box, So we know if it's an extended downtrend. This is when the time point, when it crosses, we see where the time point lies. Currently, it's somewhere near February. I hope it doesn't take that long, because it's like 4 or 5 months over there. I hope if it really comes down, it quickly comes down and break below the channel box, and then quickly resume and climb back up. And the other side is obviously coming up to the path of the distribution cycle. So that's the other half of the possibility. It's a process, so you can say it's just a matter of whether this test is over or not. If not, it's going to shake out a lot more people before the whales pushes the price up. And if you're new to this session, you notice this white dashed line. This is a declining peak trend line that I've been tracking across multiple cryptocurrencies. And this line, the meaning of it is when we have finally got our buying climax for this cycle, we hope that to go above this trend line. So rather than having a buying climax somewhere here, around the green key level, we hope to see it above the purple, because that's where the last buying climax back in December 2024 was. When that happens, this means in the long run, ICP still holds an investment or speculative value. Instead of going deeper and deeper, meaning you've got a declining return in the long run. So that's the meaning of this line. So this is the big picture of the Wyckoff. Let's go to the daily and look at what's happening underneath in a more frequent time frame. Again, if you're new to these sessions, these tags over here, while their names are similar to the one in the weekly, they are not the same stage as the weekly, because things in the daily time frame just happens much more frequent than what's in the weekly. So here, last week when we did the session, it was somewhere over here below the this yellow trend line. This was supposed to be the support, but it broke through it on the 22nd, and then it got suppressed. Let me enlarge this, because if you're watching on a mobile phone, it's a bit difficult to see. So for about 7 to 8 days, it has been suppressed under this line because it has turned into a resistant line. And then now it has broken above and passes through this wedge eventually. And now it's just a battle with the red key level. So going forward, if the bulls successfully defend the red key level, we'll edge towards this time point somewhere near mid-November. And when we get closer to November, another breakout event would happen. So hopefully this time it's towards the upside, but like I said in the beginning, be really careful it comes down for a deeper spring, because for one, this is a descending triangle for candlestick pattern analysis, and also this downtrend is still over there. It's still not being tested. The ceiling, last time the price tested the ceiling was already mid-August, so it's approaching 2 months. The price hasn't been able to challenge the ceiling of the channel. Hey Amar, thank you, thanks for your support. Yeah, so this around mid-November, if the price continues to trade like this, that's the timing we have to look into. But it's still a month, or like around a month to 6 weeks. So our next sessions will definitely be able to observe, and I will be able to discuss with you and observe how this is developing. For the volume, the one on October 1st, just past Wednesday, was pretty encouraging. For October 2nd, even though the candlestick isn't as like encouraging as the one on the first. The thing here is, don't underestimate the importance of this, because when the price shot down at this point, it opened over here around $4.48. It dropped to a point at around $4.42, but the bulls basically pushed the price back all the way to 4.58 roughly. So that's the significance of this. Even though the candlestick and the volume may not be as like obvious as the one on October 1st. Thanks, Brian. Thank you. And subsequently, when we get to this point, the October 3rd candle, we see the two wicks getting closer in length, meaning the bulls and the bears are fighting around that range, just to get to the point where we got the yesterday's red candle. So this is the zone, this red key level is the zone that people are battling around right now. We have definitely exited from this wedge and just seeing whether the price is going to challenge the top edge of the channel box. So you have seen me draw on a center line for these channels for other altcoins. So it might be time to draw one for this ICP as well. So the line doesn't always cut the box exactly in half. Is by selecting the most frequent candlesticks that the line will cut across. So I'll explain in a second after I adjusted this. So when I say the most frequent activities of candlesticks, meaning you see all these tops of the or tails of the candles, the body itself, you see they are all lining up along this line. So that's where you are going to draw the center line of the channel box. So let's remove these. The reason we want to draw this is that's where the bouncing, the ping pong I used to say, doesn't only happen near the ceiling or the bottom of the channel. It can bounce off around the center line as well. You see all these bounces. So when there isn't sufficient demand, when it passes around the center line, it's almost like a support or resistance line within the channel box. So that's the use of the line over here. So you see, whenever I draw this line, that's where the prices are going to bounce off over there. So right now we are around that line. That's something that's interesting because it also crosses a key level. So there's a kind of like a dual support as of this moment for today's candle, and the price right now is staying above both lines. And if it bounces up, that's the scenario we'll talk about, and then eventually get to the breakout time point. If it doesn't, if it comes down much like what happened here back in mid-September and late September, both briefly got over it, but then back then there was this yellow resistance line over there. That particular line here, we have passed it already. It has become another support over here. So ideally it shouldn't come into this yellow wedge again. Excuse me. Instead it may follow this, finding support along this yellow line. Unfortunately, if it's the case that it comes down to once again test the bottom, much like what it did on last Friday. So that's the daily. If you're trading in a more frequent time frame like the daily instead of the weekly, if you do swing trade in weekly, then these doesn't matter to you much. But if you're trading in a more frequent time frame, then you have to understand these are normal, and the trend right now is still heading down, even though it has sort of broken above this yellow wedge over here. So ICP still a bit of uncertainty at the accumulation cycle, and just to be careful, like I said, while we're waiting for the new distribution cycle to come, be careful this spring that's going to deeper. Hopefully that's not going to happen, and always remember your stop loss. Thanks for joining me, and thanks for your support. See you in the next session.